Welcome back, and joining us now for a wrap of the day's markets action is Perpetua's Lonwabo Maqubela. Thank you so much for your time, Lonwabo. What a good day. Another good day. Record high for the JSE for the second day in a row. Are all feet on the accelerator right now?
Yeah, it's been quite interesting actually. What's interesting this time around is that it's also the big caps that are driving it. So many of the China related
Yes.
large caps, especially on the back of the news of the, I guess, increasing of liquidity that was announced yesterday by the PBOC. It remains to be seen whether that's going to be enough. I guess over the last couple of years, you've seen various stimulus actions coming out of China, but they haven't been enough to actually, change the direction of travel. And I guess one has to, it's a fair question whether or not this will be enough. One does have to question, why has China hit a bit of a road bump? And I would say, there are a couple of factors, but most certainly the key one has been that the property sector was a big driver of demand.
Yeah.
And confidence. And obviously, as you've seen a slowdown in that segment, then it's then had a knock-on effect on the economy. You'll remember there was also the extensive COVID lockdowns, which hurt consumer income statement and balance sheets. And so it's fair to say that the Chinese consumer is busy repairing that balance sheet. And whether, whilst in a process of de-gearing, whether rates are lowered, people tend not to react as much. I think we saw this out of Japan for an extensive period, actually, where consumers were de-gearing after that property bubble burst. So it does take a while to come out of this, would be my sense.
All right. Well, Lonwabo, let's cross on over to the specific company news that came out of the JSE. Some results, some trading statements. Let's start off with Old Mutual results. They're coming out with interim numbers. They seem to be growth across the board there, and to the point where we did have adjusted headline earnings per share rising 7%. So what's interesting, though, is that markets seem to be quite muted on those numbers. What was your take?
Yeah, it's always a difficult reading insurer earnings. What is it that matters? And often you get distortions, based on what they do, how they value the life book as well.
Yeah.
But I would say, I think the market was right to have a muted response to the earnings. As much as there was earnings growth of 3%, it was below what consensus was expecting, at around 3.2 billion rand. And then, as you mentioned earlier, it was boosted by the share buyback. Often what I tend to look at is the value of a new business. So, which they disclosed, which was down 8%, for the half. And now in recent times, I've had a trend of improving margins, which actually went kind of flatlined and maybe slightly down in this result. And the reason for that was the mix of business they're writing. So they're writing much more savings versus risk, or life insurance. Life insurance is much more profitable than savings business. So the mix of business have shifted against them. They did, the mass business, so this is typically the funeral cover business, which Old Mutual is very strong in. So that's actually a very profitable business line that did actually show accelerating growth, and that was on a very high base as well. So I think that was a good thing. What was interesting was that it didn't translate into higher margins or value new business margins. So, they mentioned that they are monitoring this high lapse environment that they find themselves in. So I do think that, that impacted the profitability of the business that they're writing. And then I think also other factors, one would have thought, so Old Mutual Investments had outflows, and actually revenue down kind of 15%. So that maybe was a little bit of of a surprise. So also received slightly, I would say, negatively. Positively, I think the insurance business, so the short-term insurance,
Yeah.
they had a significant improvement, more than 100% increase in profitability,
All right.
as claims moderated. And maybe the last thing to mention is that they did spend more on group costs, some 500 million on the bank spend. So it'll be interesting to see. I mean, in the end, Discovery, one has to do the maths in terms of how much they spent there. So it will be interesting to see how much Old Mutual will spend before that gets to some kind of a break-even level.
All right. Lonwabo, before we get to your stock pick, we are running out of time, but let's quickly go to Met interim results there. Revenue lifting 4%, but that's really where the growth ended. A painful period for Mete?
Yeah, it was. I mean, it's also quite, to be fair to them, with hyperinflation, as you mentioned in Turkey, it does actually distort a lot of the reporting. So it makes it very difficult to see what's the ongoing earnings, versus the earnings that were impacted by that. So I think, as they've sold the Turkish business, you'll now begin to get a better sense of what's the true earnings potential of the business. That said, it is a difficult environment for car producers globally.
Indeed. Well, let's get to your stock picker for today. Lonwabo, what are you choosing?
Yeah, I mean, obviously it's been quite a strong SA Inc. rally, but I'd say, there have been some laggards that haven't quite participated in the rally. So the likes of Woolworths and some gaming stocks. So those would be the likes of ABSA. So I'd probably say a basket of SA Inc. counters that have underperformed.
All right, that's a good one. Well, thank you so much for your time and for your analysis today, Lonwabo. Much appreciated. That was Lonwabo Maqubela from Perpetua.